Super excited to have you join us this evening for our home financing seminar. I would like to take just a brief moment to introduce our presenter this evening, which is Nora Hickey. A little background on Nora. She joined the credit union in 2008. And whether you are looking to buy your first home, your last home, or just looking to refinance in between, Nora is committed to making the mortgage process as stress-free as possible. Now, she has 15 years of experience in this industry. She has been essential in helping our members navigate the ups and downs of the ever-changing real estate market. Her extensive knowledge of lending and her passion to put members first has earned her the Chicago Magazine 5-Star Mortgage Professional Award 6 years in a row. Yay! So we are super excited to have you here this evening. We welcome questions. We want to walk you through this process and make sure that you have all your questions answered. So please feel free throughout the presentation to utilize that chat box, and we'll be stopping periodically to address those questions. So I'm going to go ahead and let Nora take it away.
All right, thanks, Pam. Again, we're glad to be here tonight and glad that all of you could join us. So some of the topics we're looking to cover is what it entails to finance a home in today's market. A lot of you are probably maybe in a renting situation, so maybe what does it look like to rent versus buy? And things you should look at, before you kind of start the mortgage process, and all the things that the credit union can offer you during this time. So to start out, we definitely want to talk about today's housing market. So one of the biggest things, if anyone's kind of been out looking, is we are in a low inventory market. So we're definitely in a seller's market. As a matter of fact, compared to this time last year, we actually have 49.3% less inventory. So that's going to be something that you want to take into account if you're thinking about making the step to purchase a home in the near future. So you want to make sure that you have all of your ducks in a row. So that's what we're here to help you do, because it's going to be super competitive. So I don't know how many of you are currently renting. Feel free to, throw something in the chat. But what we always like to remind you is that you've probably heard, especially with historically low interest rates, it can be cheaper to own than to rent. And a lot of times that is actually very true. So in this area, you could be paying anywhere from, I don't know, $1,200 a month in rent or higher. So things to consider. But when you go to buy a house, so one thing to take into consideration is that you're going to have a couple things that go into your payment. Usually when you're purchasing a home, you do have to finance that home. So you're going to take out a loan to purchase it. So you're going to have your loan payment, which a lot of times can be less than your rent payment. But then you also have to factor in your property taxes, because now you own that property and that land. You're going to have to carry a homeowner's insurance policy to make sure you're protecting your investment. And then there could be other things that are added onto your payment as well. So I know in DuPage County, the average rent can be about $1,500 a month. But for instance, right now, based on where today's interest rates are, if you were to purchase a home for $200,000 and put a 5% down payment, your total mortgage payment could run you about $1,450 a month. And that's including property taxes, home insurance, private mortgage insurance, all of those things. But those are big variables. So we definitely encourage you to take that into consideration when you're thinking that you want to buy a house. So the other thing that is very important that you want to address is, how much have you saved for this investment? What are things that we're going to look at? So the biggest thing is we want to make sure that you have at least your down payment saved. And what's nice is we have lots of down payment options at the credit union, which we'll go through. But we still want to make sure that you've saved that money up. And then any time that you've put less than 20% down, keep in mind you will have to pay private mortgage insurance as part of your monthly mortgage payment. But again, we have, really good low options for that as well. Then in addition to your down payment, you are going to also want to save some funds that you can apply towards closing costs. Because when you do purchase a home, there are different costs that are involved, which we'll kind of review in some more details. And then the other thing you might want to consider is you might want to make sure you still have reserves set aside after you've purchased your home. So that can vary for everybody. But then what you'd be looking for is to still have some savings set aside in case, some emergency expenses or anything popped up. So there's lots of different ways to start saving, especially, if anyone's gotten, we've had all the stimulus money lately. So I don't know if you're saving that. Tax refunds, a lot of people do that this time of year. Some people are able to get gift funds from family members. So we can look at all of these options. So I know we chatted about down payment. So we have several different down payment options. I don't know if anyone here has heard of an FHA loan. A lot of times our members might think if you have a lower down payment, you need to look at an FHA loan option. But what's nice with the credit union is that's not really the case. So in our example here, what you'll see is that we have several different options. So you can do as little as 3% down, which is in the middle there. And then we also have a 5% down option. And then we also have that FHA option, which typically is going to be a 3.5% down payment. So what we always like to recommend is if you notice the FHA 3.5% down payment actually has the lowest interest rate option out of all of them at 3%. But then you'll also notice it actually has the higher monthly payment attached to it as well. So the reason that is because when you do an FHA loan, they have different types of mortgage insurance that you're required to pay with that loan. The first one is called upfront mortgage insurance. So in this scenario, that's about $3,300 that you're going to have to pay as a fee to get that mortgage. Then in addition to that, they're going to also charge you monthly private mortgage insurance as part of your mortgage payment. Now, we do the same thing with monthly private mortgage insurance, but we do not have that upfront mortgage insurance. And the other important factor is our monthly private mortgage insurance is significantly less than if you go FHA. And then on top of that, with an FHA mortgage, that monthly private mortgage insurance will stay part of your monthly payment until you either pay that loan off or refinance out of it. So as I indicated, we are definitely in a very historically low interest rate market. So if you notice, let's say you did get 3% as your rate in an FHA loan, which is a great rate, but why would you want to refinance that then if rates go up to 4 or 5% where they were a couple of years ago? So things to take into consideration. Whereas, on the opposite side with the 3% or the 5% down payment at the credit union, you do have that lower monthly private mortgage insurance, but once you've built up 20% equity in the property, you can then request to have that removed. You would not have to refinance and you would still be able to have your good low interest rate. And again, if anyone has any questions, definitely feel free to add them to the chat because we can make sure, we address those. Some other important things to consider. So when we look at interest rates and private mortgage insurance, those are going to be heavily determined by your credit score. So as a lender, we're always going to that's one of the first things we look at is, how does your credit look? So to look at that, we're going to look at what type of credit do you have? How many open trade lines? Do you have mostly credit card debt? Maybe you have student loans. Maybe you own a car. And all those things are fine, but we're just going to look at them, see how you balance them. And of course, that's going to create a credit score for you. Ultimately, if you have a credit score of 740 or higher, you should qualify for lower interest rates, lower PMI, things of that nature. However, the other important factor is with a conventional loan. So if you want to do 3% down or 5% down, we can do as low credit score as low as 620 sometimes. Now, FHA sometimes will go a little bit lower than that, but that's really the only difference there. So again, if you have any questions, feel free to add those. All right. So once you've decided, let's see here. I I will address a quick question real quick. So Tracy's asking about low inventory, purchasing an existing home versus a new build. So that's a great question. Building a new house can be a great option. I will tell you that right now, even the builders are a little backed up. I've heard of some members going to look at new construction and all the lots are already gone or sold. And I will also tell you, building new construction can be a little bit more expensive because when you purchase that home, you're going to have to, review with the builder, look at what upgrades you want, and, everything costs a little extra, which is fine. And then also you have to do all your own landscaping, window treatments. So you'll just want to make sure you really consider all of those options. But that could be a better way to go. I think it really just depends on the area you're looking in. And then we'll kind of touch on too, different things that the credit union can help you with to make sure that as buyers, you guys look as, competitive as possible. So great question. All right. So once you're ready, so before, the first thing you're going to want to do really is apply for your financing. Any realtor that you're going to want to work with, or even if you go talk to a builder, they're going to want to know, have you been approved for a loan? Especially in this market, that's going to be huge. So in order to get pre-approved, it's really easy at the credit union. So first, you can give us a call, talk to one of our lending specialists. You can go online, even just start the application online. We review it right away and get back to you within 24 hours, usually, if you're looking to purchase a home. And then what we do is it doesn't cost you anything. There's no fees, there's no financial obligation. The biggest thing we do is we do pull the credit report, like I mentioned, because we need to kind of determine how much of a new house can you carry, what things are you paying now, again, what rates you qualify for, things of that nature. Then we always ask that once you do apply for your mortgage financing, it is important that you try not to change your financial picture as much as possible. And that's more of a one-on-one conversation that your lending specialist will have with you to see, what your debt threshold is and, what things you can do or what things you shouldn't do to make sure your pre-approval stays valid until you find a house. So one thing that we do encourage you to do also is when you do apply for your financing, we do offer different options to make sure that you have that competitive edge when you're going to make an offer. So for example, you may find a house that you really like and you're concerned about multiple bids. So we can make sure we review your whole financial picture. So that means if you give us pay stubs, W-2s, tax returns if applicable, bank statements, and we can verify as much about you as possible, we can then issue a stronger approval for you to show that seller saying, look, my credit union has looked at everything. I am good to go. I just basically need a house. And then once you get your pre-approval, that is usually good for 90 days. After 90 days, your credit report will expire. Now, we wouldn't just automatically repull a credit report at that point. That's where your lending specialist will be touching base with you to determine, where are you at in your house search? Do you need to get, that pre-approval updated right away? What options do we have? So another good question about what happens if you change jobs during the process. So once you get that pre-approval, again, we do try and ask that you keep everything as status quo as possible. However, if you are presented an opportunity to take a new job, maybe it's a better paying job or better position for you, closer. If you are moving into a regular W-2 salary or hourly position, that typically is not going to be of concern. So we would ask for, as a lending standpoint, is we would want to see that offer letter showing that you have been extended this new employment offer. And then you cannot close until you've received at least one pay stub. So for instance, if you are still looking for houses and you switch jobs, you're probably going to get paid a couple times before you find a house. Sometimes I do have members who go under contract on a house and change jobs at the same time. So there, we just want to make sure the timing works, but we can work with you on that. The only time that becomes more of an issue is if you're self-employed, because that income is looked at very differently, or if you get additional income such as commission pay, bonus pay, that can be more difficult to verify if you switch jobs. So again, those are things you would absolutely want to discuss with your lending specialist if you're in that situation. All right. And then in terms of new construction, the pre-approval process is really the same. Usually, though, it can be where the builder wants to see, let's say you make an offer on new construction in April. They're going to want to see that you're fully approved for everything, even if that house won't be ready till November. So you have to do all the work up front, which is fine. We will help you with that. And then we do kind of sit and wait then for the house to be ready. So you would expect in that situation, you would have to give additional updated documents to your lending specialist on a regular basis. So we would have to update pay stubs, bank statements, things of that nature, throughout the process until we're ready to close on that house. Okay. Let's see here. So all great questions. Applying for mortgage, again, super easy, lots of ways to do it. So any questions about that, just let me know. All right. So another great program that we have here at the credit union is that we have our preferred realtor network. And that is another huge advantage, especially in this market. And the reason I say that is because we have vetted these realtors. They go through a rigorous screening process. Pam, who you met ahead of time, actually helps control that process. And we will only allow realtors that we know do an excellent job to go above and beyond for our members to be part of this program. So when you're working with one of our preferred realtors, we know that you're going to be taken care of and that they're going to be able to, use all the tricks of the trade, so to speak, to make sure you're being as competitive as possible again in this market. And then what's even nicer is if you choose to work with one of our realtors, they will even give you a rebate back at closing. You can earn up to $500 back depending on your price point. And as a buyer, that really is free money because as a buyer, you do not pay your realtor's commission. That is something that comes out of the seller's proceeds if they're selling a house. And what's really great with our realtors is they cover DuPage and all the collar counties. And then with DuPage Credit Union, keep in mind, we can lend in the entire state of Illinois. And again, we have our realtor network covers DuPage, Kane, Kendall Lake, McHenry, Will, parts of like a pretty expansive area. All right. And I know, kind of circling back to a question about jobs. So if you are retired, we can absolutely use your retirement income. So if you collect Social Security income, pension income, we can look at that. And then alternately, if you have a part-time job or a side job on top of that, we can also use that job even if the hours are sporadic. But with that, we would want to see that you have at least a 2-year history of working for that employer. So again, that's where, we would want more history, kind of like with those other situations. All right. So once you've applied for your approval, we've gotten everything reviewed for you. We want to make sure that you can present the strongest offer possible. Hopefully you're working with one of our realtors and then you find the home you've been looking for. So at that point, that's really when your loan process kind of kicks back into gear again, because once we give you the initial pre-approval, there's not too much you really need to do in terms of your loan. You just get to go out and start looking at houses. But once you find one, then that's when your loan specialist then is going to start working with you to get you ready for closing. So as soon as you apply, give us your contract saying that you are under contract purchasing a home, one of the first things we'll have to send you is what's called a loan estimate. The loan estimate will itemize all of the possible costs that are involved with purchasing a property. So we're going to look at both buyer and seller costs, show you what all of those look like, what that entails. And then what we'll do is go through those line by line so you understand them, so you know exactly what you're getting into. Then the other thing that we're going to do is calculate out what are your costs versus the seller costs. And then we're also going to help you determine what credits you're going to receive as a buyer. So when you buy an existing home in Illinois, we pay our property taxes 1 year behind. So a lot of times what happens is if you were buying a house today that's, already an existing home, you would take occupancy, let's say March 31st. Well, you're not going to start making a mortgage payment until May 1st. And then in DuPage County, your property tax bill is going to be due June 1st. So we're going to make sure that you have enough money to pay that tax bill as your lender. but you are actually paying a tax bill that was for 2020, even though we're in 2021. So to account for that, your seller has to give you what's called a tax credit at closing. So depending on the property tax amount for the house that you're purchasing, that can be, anywhere from a couple $1,000s to, sometimes 10 or more $1,000, depending on your tax bill, that's going to be credited to you at closing. So that's going to really help offset, the money you needed for closing costs and maybe part of your down payment. But that's something we can always review with you, if you apply or, when you get closer to finding a house. So those are things to keep in mind. Then right before closing, what happens is you get what's called a closing disclosure. So that's going to reiterate all of the fees that were initially disclosed to you, but then that will account for if you have those tax prorations, if you negotiated any seller credits after a home inspection, things of that nature. So if you have any questions about that, again, feel free to throw it in the chat. But that's when, again, we're going to start moving you towards closing. The other thing I should mention, though, is on new construction, you won't get these tax credits because usually on a new construction property, you do not have a fully assessed tax bill for up to 2 years. So that's another thing you'll have to take in consideration, because when you take possession of that home, the tax bill might be $100 for the year, which you'll have to pay. Then the next year, it could be $2,500 for the tax bill. But then going into year 3, that's when you should be fully assessed. So depending on where you built or, the price point in the county, then your tax bill could be $8,000 or $9,000. So we want to make sure that you're prepared for that as well. So again, your lending specialist would review that with you if you're looking at new construction. All right. Let's see. So another good question so you mentioned shared equity, Tracy. So I can tell you that we do work with like employer seconds. So I know there are some employers in this area that do give down payment assistance to their employees. I know Wheaton College, for instance, is a big fan of that. They'll give you up to $50,000, I believe, and we can work with those programs. But there are some limitations sometimes. So if you have an employer that does something like that, the sooner you get us the information to look at it, the better, so that we can tell you if we're able to use that or not in terms of financing. So good question. All right. So again, once you've gone under contract, we would have, locked in your rate, disclosed all of your costs, because on a purchase, you cannot lock your rate until you have a property. So you do float your interest rate. We are in a very low rate environment. Right now, our 30-year rate's been at about 3.25%, which is historically low. I know last year they got crazy low, but I promise you 3.25 is still a great rate. I would estimate that if you think back to that 5% down payment option, if you did a 30-year mortgage at 3.25% and you were borrowing $198,000, your principal and interest on that loan is about $827. About 2 years ago, our 30-year fixed was about 4.25%, so the principal and interest on that was about $935. So even at 3.25%, it's still very cheap to borrow money compared to where it was a couple years ago. So keep that in mind. Interest rates are still historically low, but you cannot lock in until you find a property. Once again, you're under contract, we've disclosed your costs, we've locked your rate. Then we're going to work with you to update any documents. Do we need new pay stubs? Do we need new bank statements? We'll communicate all of that to you. We'll get you to sign some loan paperwork, initial loan paperwork, and then we're going to also work very closely with your realtor, your attorney, because on a real estate transaction, you will want to use an attorney. That's a flat fee that you pay at closing. They don't bill by the hour or anything like that. And then they'll all work with you to make sure that we get title work done. Your lender is going to order an appraisal, and we get all of that loan documentation ready for you so that you're ready to go. And then your realtor is going to continue to work with you to make sure that, that you've been communicating with your real estate attorney. They're going to make sure that you can set up your final walkthrough, and they're also going to make sure that you're getting ready for closing. All right. So overall, the biggest thing is the more you can prepare ahead of time, again, getting your pre-approval, having your lending specialist look at your documents. If you have any questions about income or, down payment programs, let us know. And then as a rule, we always look at kind of like the rule of twos. So for bank statements, we always go back 2 months. For pay stubs, we always need your last two. For W-2s, we usually want 2 years worth. If we need tax returns, again, 2 years worth. And then, we look at that. So, and then again, for employment history, we always want to see a 2-year employment history. You don't have to have been necessarily with the same employer for the last 2 years, or maybe you graduated college last summer and now you're starting a new job. That's okay too. But we always just need a full 2-year history. We also want to know where you lived for the last 2 years. I don't know why it's always two, but it is. So that's what we look at. Now, again, there could be a scenario where if you apply for a mortgage in March, we're going to ask for your last 2 bank statements. So maybe all right, perfect. So as I was saying, if you have any credit blemishes or whatnot, I mean, we can tell you exactly what those waiting periods are. They can be anywhere from 2 years to 4 years and maybe a little bit more depending on the situation. But the other thing that I like to tell people is if you are at all thinking about maybe buying a house in the next, you know, 3 to 12 months, it's never too early to ask about your financing because we can then address anything that may need to be addressed and then time will be on our side. I've had members before where we pull credit and they find out they had a collection that they never should have had or something was reported late. And they're able to go back to those companies and get them to fix, if it's an error, they'll fix it. And then we can make sure we get everything updated before you're actually ready to go under contract on a house, lock in your interest rate, so we can make sure that you, again, are getting the best score possible so that you can get the best rate possible. But I will say again, the other nice thing is with rates being so low, I mean, there's really no bad rates right now. Everything is, pretty good. So, all right. So let's see. So some things, in terms of minimum credit score, typically we're looking for a score of 620 or higher. And then, as I mentioned before, with the credit union, what's really nice with the credit union is that we do have very low private mortgage insurance rates. Anytime you take out a loan and you have less than 20% equity, you will have to pay private mortgage insurance, no matter where you go. But what's nice is as a credit union, we have much lower rates. So PMI is kind of like car insurance. It's insurance that your lender is taking out because you're putting less than 20% down to protect the lender, honestly, if you were to go into default. But what happens is usually as credit union members, we have a very low default rate. You guys do an excellent job of, keeping everything on track. So we get really good rates for that. The other thing at the credit union is that we do not sell your loan. So you would always be dealing with us. So once you own that house, you're living there, you have tax questions about your tax bill, you want to change insurance companies, or you always just want to make sure that you have the best loan for you, you just give us a call. We're here, we're local. I've been here the last 13 years, so I still talk to members every year with questions they have. We're definitely here to meet your needs. And we have different solutions, and we're always looking for ways to make sure that our members are getting the best solution possible. And then if you guys are interested in, talking with someone, you can give us a call. You can go online, send an inquiry. You can stop into a branch location. We have lots of different flexibility in terms of, talking about your pre-approval options and what would be the next steps. And then again, as I mentioned, definitely I would take advantage of our preferred realtor network. All of that information is on our website. So you can go on there, check it out, see who's out in the areas that you might be interested in. Or, I always have my recommendations because there's some realtors that I worked with very closely over the last 13 years. And again, they do a phenomenal job. The other thing to keep in mind is that we do have our mortgage guarantee. So what that means is, again, it's a very competitive real estate market, but DuPage Credit Union will guarantee that we will meet your closing date as long as we have at least, we just ask for 30 days to close. And then we ask that you make sure you give us any documentation we need, within the time frame that we need it. And then lastly, we also will always compare if there's been plenty of times where maybe, my dad told me to call this person or this guy at work told me to call this person, that's fine. It's definitely good to shop around. And if you get other information about loans, we are happy to look at it with you and make sure that you're choosing the one that's best for you. Because that's really important to us. At the end of the day, this is a financial commitment that you're making. So we want to make sure that it's working for you. And then, of course, for attending this virtual webinar that we hosted this evening, you also get to take advantage of our promo code, which is Purchase21. And that promo code is good for a full year. So if you buy a house in the next year, you will get $300 off your first month's mortgage payment. So that's a nice little bonus, especially once you get into, your new house. You're going to have new expenses pop up, things of that nature. So we're going to, lessen the burden by $300. So that's just a little something from the credit union to our new home buyers. So what we always suggest, again, is definitely don't be afraid to start the pre-approval process. It's so easy. We can do a free consultation. The lending specialist consultations are over the phone right now, but we can do some in-person branch appointments with our member service people, but we can always help you decide, figure out what's best. And then the sooner you know your credit profile, the best. So feel free to also use annualcreditreport.com. You can actually pull that weekly right now, I believe, because of COVID, which is nice. So you can see what's reporting and make sure that it's accurate. And then if you have questions, about your budget, what you can afford, we're here to help you with that. And of course, we definitely encourage everyone to always ask lots of questions and feel free to, send your friends because, again, we're here to help. So here's some information for you about annualcreditreport.com. Fannie Mae is a wealth of resources on, different lending requirements. And again, there's my contact information. So I look forward to helping you guys in the future. So again, if there's any other questions, feel free to throw them through the chat, or I know Pam also threw out some email information there. There was one quick question here. So length of credit. Usually, so we do look at the credit report. If you have at least a 12-month credit history is usually what we're looking for. And again, how that affects your score is going to be the biggest thing. But again, if you have a good, healthy history, you've had it for at least 12 months, you should be good there. And then when a lender pulls your credit, it should not really affect your credit score greatly, especially a mortgage lender, because we will only do the one credit pull. We do pull all three bureaus. It's not the same as if for instance, if you're shopping for a car and you go into a dealer, they might pull your credit like 12 times because they shop it out. We don't do that. So applying for a mortgage should not affect your credit score. So all good questions, and I'm going to turn it over to Pam.
Okay, great. Thank you so much, Nora. That was a lot of wonderful information. And please feel free. You may think of additional questions in the next couple of days or weeks to come. Again, Nora spoke to the market right now, which is pretty crazy. So the best thing we can do to help you is to get you prepared. So it would be a great idea to make an appointment, talk to a mortgage specialist, apply, and we can see how we can help you and perhaps match you with a realtor in our network who can get you started on those searches. Again, we appreciate you taking this time this evening, and I'm happy to follow up with any additional questions or concerns you may have. Again, thank you for your time, and please follow up with Nora or myself if we can help you in the future.
Yes, thank you.